let's talk macros for a tad bit now. Moody's came out with a stable or a positive rating outlook on India. So basically, they've maintained their rating on India. But they also say that India may see a capital account pressure whenever unfavorable data is released. Atsi, Sheth, Associate Managing Director at Moody's Investor Services, joins us now to talk about that. Hi, Atsi. Good morning and thanks for joining us. Before I come to your report, I just wanted your view on the inflation number that came out yesterday. The CPI is at a 14-month high of 5.41%. Do you expect more pressure on the inflation front in the months to come? And the Jan 2016 target, of course, will be met. But what about the targets next year?
Sure. Sonia, if you look at the inflation number, it's clear that food inflation has been one of the drivers of CPI, and that's been a sort of a well-known fact about India. It's something that constrains our longer-term view on India as well, that simply the supply-side factors in the food market of India are not yet in place to control this inflation. So you will see it spiking from time to time, particularly now, which was not a good monsoon year. So this was not really unexpected from our perspective. Yes, it is edging higher, and we do expect that there will be some pressures from food inflation in the coming months. Having said that, the RBI has been fairly vigilant around the inflation numbers and inflation expectations per se. So we do expect that monetary policy will be finessed to make sure that the targets are met, not just next year, but the year after as well.
Okay. Hi, Atsi. Good morning. Do you think there's any threat to the rating because of the pay commission next year? The government has also to bring down its fiscal deficit to 3.5. Will it meet both pay commission obligations, one rank, one pension obligations, and a lower fiscal deficit?
It'll be challenging to do both. But again, that isn't unexpected, Lata. We all know that every decade or so this happens. So if you have been watching India for a while, as Moody's has, this is not unexpected. We've long said that, look, India's fiscal position is a constraint on its rating, even if India meets its fiscal deficit next year, which we think will be challenging. But even if that happens, its fiscal numbers will be weaker than similarly rated countries. So that will remain to be the case. Our own view on India's fiscal is that when growth does well, India's fiscal tends to benefit from it, and when growth does poorly, India's fiscal, obviously doesn't do as well. But in addition to that, the fiscal position is vulnerable to one-off events. In this case, it's the pay commission. In the past times, it's been food subsidies or commodity price upswings when fuel subsidies were still in place. So there are always one-off events which India's fiscal position will be vulnerable to, and that is why, in spite of its very good growth performance, in spite of the very good growth outlook, its rating remains in the Baa range.
Okay, I just wanted to one follow-up question on the point you were making about food inflation earlier, Atsi. Do you think that the RBI's overall inflation target of 5.8% by Jan 2016 could be met? Because, the first 8 months CPI has averaged to about 7.8%, and I agree that the second half of the year is generally lower than the first half, but this time we've had very unusual weather conditions as well. So do you think it could be challenging to meet that Jan target?
Yeah, Sonia, and you've pointed out that the risk really comes from food inflation, which is something that monetary policy can't really control. So if there is a risk to that target, it comes really from food prices, which are A, difficult to control, but B, also very difficult to predict. So I think that will really depend on that. Our own view is that even if it is missed, it will be missed by a very, very small margin, given where non-food trends are going and given where growth is, because we've not really seen an uptick in growth. That would be the more worrying aspect of inflation. If you were seeing growth and pricing power really gallop rapidly, then you'd be worried about future inflation more. Right now, it seems to be supply-side factors related to food.
And when do you see growth re-emerging or upticking?
We actually brought down our forecast for this year several months ago, and growth currently seems to be on trend for that forecast, which is a very slow uptick. We are saying that over the next couple of years, we expect growth to go somewhere from closer to 7% to somewhere closer to 7.5%, maybe a little bit above that. So I would say we're a little bit more conservative than some of the forecasts, which see growth going up to 8 or even above over the next 2 years. We think somewhere between 7.5 and 8 will probably be the peak in this particular cycle for India, given what we're seeing in the outside world, given what we're seeing in terms of the supply constraints being very difficult to eliminate.
All right, we'll leave it at that. At least it's a cautiously optimistic note to end this conversation. Atsi Sheth, as always, pleasure speaking with you.